Hi, this is Jack Slocum with Option Alpha, and today we're going to be doing something a little bit different. I'm very excited about this video. I've been wanting to do it for a while. We're going to be making a few earnings trades. We're going to take a look at how we can use a betting strategy in order to place 4 different earnings trades, and the goal is for one of those earnings trades to produce an outlier win in order to make up for 3 potential losers. If 2 or more actually win, then obviously our profits will increase even further. Before we jump into that, here's how our positions have been doing. I opened this XOP Iron Condor in the first video of this series. It's still on the record here. It's $84 in the positive right now. And in the second video, we started a bot that auto-traded, and it has opened 2 positions so far. This USO Iron Condor, which was opened today at 10 a.m., and this XLE Iron Condor, which it opened yesterday at 9:45 a.m. I'll keep you up to date on how these bots are doing monitoring these positions. Let's go ahead and jump in. I'm going to make these earnings trades. I'm heading over here to OA Labs, clicking on earnings. These are all the earnings reports that are coming up in the next few days. Has some very interesting stats about what the expected move is that the market is pricing in, the beat rate, how often these stocks actually beat earnings estimates, the average move that they make in the first day after earnings, and the best and worst one day after earnings. Like most areas in the platform, if you click here, you can actually add in a few more columns. So I could click and add in what's the average 5-day move for the stock, for example. We're actually going to be jumping in real quick here. I was looking up a trade. The first one we're going to go with is in Boeing. I was looking at this stock earlier this morning. If you look, its actual stats for beating on earnings reports is not real great. 30% of the time it beats the EPS estimates, only 45% it beats on revenue, only 25% it beats both, and 50% of the time it actually misses both earnings estimates. If we look for this earnings report, the consensus estimate is that they're going to lose $1.52 per share. And the estimized estimate is that they're going to lose $1.17 per share. If we look over here on the side, we can see how they actually do after earnings. So these charts represent approximately a 5% move last time on the first day after earnings to the positive. You can see there's several outliers here. And I like the outliers. I believe that this stock definitely makes some pretty strong moves after earnings. However, if we come and we look at this 5-day here, we can see some of those moves have mean reverted, and the trade I'm going to be making is based on that hypothesis. Basically, the belief here is that they are going to beat, according to the estimates here, and the move that they're going to make is not going to be too significant. Before I make my actual trade, I'm going to show you an additional piece of data I'm including in my analysis. This right here is the max pain chart, which shows the strike prices where the most options will expire worthless. And the strategy we're going to be trading, we want options to expire worthless. In this particular case, I'm looking at this max pain chart and I'm seeing the majority of options will expire worthless in this 170 to 175 range, which is part of the position I'm going to be trading. So I am believing that they are going to beat as well. I believe that they're going to beat by a little bit, and I believe that the stock price will go up just a little bit as well. So I'm going to open a new position. I'm going to select an Iron Condor here. I'm going to make my short strike the 172.50 put. I'm going to make my long or my short call the 175 call. I'm going to make my long call the 177.50 call. And I'm going to come back in and make my long put the 170 put. So if you look here, I'm creating an Iron Condor where I'm hoping the stock price will fall somewhere between 172.50 and 175. And for that, I'm going to get a credit of $2.03, which means that as long as the price falls somewhere between 170.50 and 177, that there's a good chance that I'm going to take down some type of profit from this trade. I'm going to be risking $250 across 4 different trades, and the idea is to get a multiple on that $250 from one of the 4 trades. 5 contracts, there we go. We're going to try to get filled somewhere around $1.95 at the worst. Yeah. Let's see if we can keep it. Let's see what happens if we do $2. Let's see if we can get filled around $2. I'm going to actually make a new bot. This bot is going to be for my earnings trades. I'm going to select my Tradier account here. I'm going to give this bot 2,500. And there we go. I have my earnings bot. I'm going to go ahead and place this trade. Boom, we just got filled, and we got filled at $2.02, which is a little bit better. So if you look here, the maximum profit I can make off this position is $1,010, and the max loss is $240. So I have a 4-to-1 risk reward ratio, which is exactly what I'm looking for since I'm trying to win 1 out of 4 trades. So we're going to go ahead and make that trade, and let's jump in and make our next trade. Okay, so this next bet I'm going to be making is definitely a contrarian bet. Basically, if we look here, they always seem to beat 95%, 95%, beat on both 95%, and never miss on both. This is Visa, by the way. The current consensus estimate is $2.44 per share. The estimized estimate, $2.48 per share. This stock, in my opinion, is ripe for a miss. And if you look at their history, sometimes, even when they beat, they still go down. This time 6.92%, and in 5 days, 9.78%. So if they don't beat, they get clobbered. The logic behind this bet is a contrarian view. If everyone is saying they're going to beat, and Estimize is estimating they're going to beat, and they don't beat, let's say they only hit, then they won't meet expectations for the first time in a while, and as a result, their stock is going to get clobbered. Let's hope that's the case and go ahead and make this bet. We're going to be doing a long put spread. The short put is going to be at 265, and the long one is going to be at 260. And if we look here, we have a 600% reward risk ratio. Now, in order to hit that, if you look, we're only 3.3% out of the money and 5.2% in order to get the max profit. And based on this chart that we looked at over here, there's a chance that we could get there if Visa does not exceed expectations. So I'm going to go ahead and place this trade. It's like about 3 contracts. Yes. And considering this bid ask, I'm going to pay up to, let's try 70 cents. Still only 3 contracts. Let's say we pay up to 71 cents. All right, select my earnings bot, place this trade. Boom, we got filled immediately at 71 cents. That's great. So for this particular trade, again, our max profit, $1,287, and our max loss, $213. So again, we only have to win 1 out of these 4 trades, have to do well and produce an outlier in order for this strategy to be profitable. For our third trade, we're going to be betting against AT&T. And I'm personally an AT&T customer, and I can tell you there have been many times I have not been satisfied, and maybe this is a way for me to get out some of my frustration with them. If we look at their moves after earnings here, we can see they have a history of some pretty big outliers to the downside. This time was minus 10% in 1 day, minus 12% in 5 days. This one minus 7.62%. This one minus 8.42%. So they have a track record of occasionally having big moves to the downside after earnings, especially when they miss. And if you look here at their stats over how frequently they miss, we can see 90% of the time they figure out how to beat on EPS, but only 45% of the time do they actually beat on revenue, and only 40% of the time do they beat on both. This time they're estimating that they're going to beat, but we're going to be betting that they're not going to beat, and one of these outliers is going to occur. I'm going to be selecting a long put. I'm going to go with the far out of the money 1550 put here, which is 5.8% out of the money. If you look, it's 8.8%, which is within the range of the outlier moves here, that it's actually going to go to $15. And if it was to go to $15, because I'm only paying 7 cents per contract, my potential win then would be far greater than the 4-to-1 that I'm looking for in order for my strategy to be profitable of 4 trades producing one sizable winner. So I'm going to go ahead and select this one. Let's say somewhere around 35 contracts. Go ahead and place this trade, my earning spot, and we're going to place this trade. And boom, we just got filled at 7 cents. So there's our third trade, and we have one more to make. The fourth trade I'm going to be making is in Biogen. So if we look here, they have a strong history of downside moves, even when they beat. Last time they moved down 7.39% in one day and 10.43% in 5 days. Time before that, 5.67% in one day, 8.28% in 5 days. And if you look, there's lots of downside moves here, even though they tend to always beat. So they beat 85% of the time on EPS, 95% of the time do they beat on revenue, 85% of the time they beat on both, but the stock still goes down. So we're going to bet, according to this estimate here, is that Estimize is predicting they barely beat. We're going to bet that whether they beat or not, the stock is probably going to go down according to the historical track record for the stock. So I'm going to come up here and select new position. I'm going to select the long put spread. And the legs I'm going to pick are going to be pretty far out of the money. Let's say somewhere around here. So if we look, we would need it to fall somewhere between 6.3% to go in the money and 8.9% to take down our max profit. And max profit would result in a reward risk ratio of 525%, well within what we're looking for in order for one of them to be able to make up for 3 potential losers and still turn a profit. So let's select 3 contracts here. We'd be willing to go all the way to, what if we went to 90 cents at the worst? Be risking 270. It's a little bit more for this one, but let's go ahead and place this trade. I'm going to select my earning spot. We're going to fire away. And boom, we just got filled at 83 cents. So if you take a look here, our max loss actually ended up down below that $250 threshold, which makes me happy. Our max profit is $1,251, which means I only need to win one of these, again, out of the 4 in order to produce profit out of this particular betting strategy. And if I win 2 or more, obviously that's going to be a great win for me, and we'll see how that goes. Let's say that none of the 4 win. That's okay. We're going to come back in a future video and we're going to try again, and we're going to alter the amount that we're betting in order to make it so that we need to win one of those to make up for these 4 losses as well as the other 3 losses, using a progressive strategy that I've used in other games of chance. All of these report tomorrow. I'll let you know how that goes in my next video. If you got anything from this video, don't forget to like it. If you have any questions about what I'm doing, please ask them in the comments. I'd love to hear from you. On behalf of the OA team, we love you, and God bless.